Welcome back to The Connected Business and our series on trading and technology. In this segment, the fourth in the series, we're going to be looking at trading floor and technologies that are employed on floors. And with me to talk about that is Dushyant Sharavat from Tower Group. Dushyant, what exactly are the changes in trading floor technology?
So what's been happening, Paul, on the trading floor has been, one of the themes we're looking at is a tremendous amount of integration across the trading floor. And I'm not talking about integration necessarily of one system with another system, but integrating all the different activities across the trading life cycle on the trading floor. So connecting the human trader that sits behind the desk, connecting their trading turret, for example, they might be using to trade with other participants in the market. So the physical connectivity between that trading turret with other pieces of equipment outside the firm, within the firm. You're talking about back office connectivity. So integration as a theme is pretty important right now across the trading floor, across individuals, software, hardware, services, both within the firm and outside the firm.
Why is integration, what is it about integration that's important? Is it that it makes things flow quicker and smoother, or is there something more than that?
Yeah, so there's a couple of reasons why integration is such a major issue. With the levels of automation we've seen, it used to be that human beings did 90% of the activity 15 years ago on the trading floor. Today, 3/4 of the activity is done by systems. So the integration or the communication between human beings that naturally happen now needs to be taken over by physical connectivity of all this infrastructure we've built around us. Second element is markets being as volatile as they are. You cannot afford to have any kind of breaks between that communication. Because if you are half a second or a microsecond slower in certain markets in a certain region, that could make all the difference.
You could lose all your profit.
Absolutely, between you and somebody else. For example, on May 6th, the day the flash crash took place in the US, where the market dropped, considerable amount. If you've got, if it exposes any lack of integration, which the eventual result of that might be, you might be late to market, a couple of seconds behind somebody else, that'd be terrible for you as a trading floor. So because of volatility in the markets as well, in addition to the first point that I said in terms of so much technology, automation and integrating all those sort of what used to be called islands of automation has become critical for firms to focus on.
Now, trading applications are changing a lot as well. Tell me about that.
Yeah, trading apps, so the big theme of the trading applications essentially has been to enhance the productivity of the trading floor itself and productivity of the trader himself or herself. If there used to be 10 traders doing things on a certain stock, trading Microsoft for Morgan Stanley, today they're probably just 2 traders trading Microsoft. So you've got a lot of pressure on the traders simply because of fewer traders available for firms. So you're having to do more with less. Second is there's a lot of pressure because of market competition between firms, both in the investment management side and on Wall Street, forcing people to be more productive across the space. So productivity, not just in terms of doing more with less, but really being smart about what you're trading, when you're trading it, how you're trading it, how you're managing your cost base, how you're servicing your clients. So productivity across all those dimensions is becoming a critical element of how firms operate.
Right, and is that software, is that being written by NASA scientists somewhere, or is it being done in-house? What's the balance between self-developed, in-house developed, and bought in?
Well, a lot of the software, which is sort of the plumbing, is essentially bought off the shelf from providers of technology. A lot of the trading algorithms, or the intelligence,
the secret sauce.
Exactly, the secret sauce, that's still being done by firms themselves. So it's Morgan Stanley writing their own algorithms, or Goldman Sachs, or Barclays Capital. Some investment management companies are writing the algorithms as well. So it depends on what kind of software you're talking about. So on the trading side, it's still being done by firms themselves. But for everything else on the software side, is essentially off-the-shelf stuff you can buy from firms.
Thank you very much, Dushyant. In our last of these 5 segments on trading and IT, we're going to be looking at how companies are actually reducing costs and how they're achieving operational efficiency.